Welcome back. You're watching the first edition for the week of Business Morning on Channels Television. Now, the weekend fun was dampened for most Nigerians with the scarcity of petrol. Bosun Omofaye, Business News editor, joins me now to talk more about this. A good morning to you, Bosun. Now, did the fuel scarcity give you the weekend blues?
I wish that comes up with some blues, as it were. Good morning, everyone, Harriet. But of course, we know folks would always find a way to pull through whatever the crisis is in the energy markets in Nigeria, find a way around it. But let's spend a few minutes to talk about where the oil and gas segment of our market finished off on Friday, and you can see some of those numbers coming through now behind me on this with the slides here. You find 40 oil finishing off at a new high here at 190 on Friday. That's just a sluggish 0.02% for about half a million shares, about 408,700 units. That's what we saw on Friday. 40 oil has been climbing. That's one of the major indigenous oil marketers doing big business, listed on the market, one of the blue chips, if you want to call it that. Mobil oil is trading below that figure for 40 oil. It was flat on 14,290. Let's move on and look at MRS, always flat, and has been flat to keep happening on that, 50, 54 for several weeks. Just a very small volume, 1,200 units. You see that on the screen. Then we get to the big boy of the market, Oando PLC, 1570. Closing price on Friday, as usual, millions of shares, 2.625 and 365 units of shares in Oando, with those announcements that came during the week we just finished regarding the new investment of cash and special shares that will be issued between Oando Downstream and Vitol Group and Helios Investments. Those arrangements will go to regulatory approvals, and after that we'll see how that will come into 2016 financial statement. The balance sheet for Oando Downstream will focus on that. Total PLC 165 was the closing price on Friday. That was where we're starting off today. Less than 1,000 units, very lukewarm performance there in Total PLC, and those who hold those shares are holding their breath. Seplat, the highest price stock in the oil and gas, the only exploration and producing company, 342, up by 0.29% for 47,850. Then we get to one of the lackluster performer in the oil and gas sector, Corn Oil, another indigenous oil firm, 40.85 trading. So we saw that on Friday. That will be the starting point this morning. Nothing is likely to change on Corn Oil unless there's something new that's coming through, 2,622. So you find most of the oil stocks on our market largely muted over the past few weeks because of lack of direction as to what happens to almost 300 billion naira that the government's owing the petrol marketers, and will they get new lines of credit from the banks? We'll talk about that in about a minute. But if you look at the daily return, the market was flat for the oil and gas segment on Friday. Year to date, about 7.6%. Price to earnings ratio hasn't changed significantly, 8.7% on Thursday, finished 8.6% on Friday, tracking the broader market at 9.8% in terms of price to earnings. Dividend yield unchanged. And of course, we will be looking at how this 7.6% year-to-date index negative for oil and gas, how will that impact on the earnings, how the new earnings will impact on these indicators, especially these three, year-to-date, price to earnings, and dividend yield, when they report their second quarter numbers. The first quarter was significantly negative, so dividend yield is just about 3.1%. Will this repeat itself in the second quarter when those numbers start coming through in about 2 to 3 weeks' time? We'll be on the lookout for those numbers. Now we get to what we call facts behind the figures. Now look at what's happening. The federal government still owing oil retailers about almost 300 billion naira. As we speak, it's about 292 billion naira. For the first quarter, that figure stood at about 230, 250. We've seen that increase slightly over the last 3 months. commercial lenders, what you call banks or deposit money banks, now refusing new lines of credit to these oil importers. The importers say they want direct intervention from the government. Petrol product scarcity persists, and the banks has a history of oil import financing. Don't forget, at this time, in 2009, precisely 6 years ago, the central bank was in the process of taking down the first 5 local banks that were seriously exposed, not just to margin loans in the market, but also to granting billions and billions of dollars to oil importers. That was part of the problem that led to the collapse of some of the commercial banks. You know their names very well. When Lamido Sanusi, the then central bank governor, made his announcement in July of 2009, and that set up in pace what happens with the banking reform in Nigeria. Now we're getting a similar situation in our hands where the banks are now seriously exposed to the same oil and gas import business in Nigeria. Harriet, back to you.
Well, Bosin, it seems as if things aren't going to improve in the very near future. I mean, deposit money banks are not ready to begin to, give on credit to, to these importers, and so the few queues are going to remain. And it just seems as if it's business as usual. I remember when we had this conversation on Friday, I still said it. Why is nobody saying anything about these queues that have surfaced at the filling stations?
Yes, the banks won't give you money. It's also about KYC, know your customer. Now, if you know very well that your customer is significantly exposed to the Nigerian government that hasn't said anything, nor do anything, whether to deregulate oil prices and also provide some bailout or pay your customer, you're not going to give him additional money. Now, that is very significant. So the banks are watching not just their customers, they're watching the big brother here, the big elephant in the room. That's the government at the center. And that's quite significant for how you lend money. In this business of banking, you need to be sure where your money is coming from. And under the table, you're likely to be having some nudging by the central bank, or pinching, as it were, to say, look, be careful how you lend to the oil and gas guys, especially those who are doing the downstream business. Well, you can lend money to the guys in the upstream, those guys who are buying the oil assets in the Niger Delta and producing crude oil, even at $60, $62 a barrel. That's a good business. For those guys who are doing importing, nobody is sure whether the subsidy will go or stay. How would the bailout be carried out? Will there be further forensic investigations as to who did what, how will be paid, when they will be paid, how much will they be paid? These are things lining up. So you're looking at your regulator on one hand, then you're looking at your balance sheet at the other hand. These banks are also exposed to the power sector in hundreds of billions of naira. If you put the two, oil and gas and the energy and the power sector together, you're looking at something in the region of 1 trillion.
That's very heavy.
Of bank loans that are in these two significant pillars of our economy. How much weight does the fiscal economy have to support the banks if these monies don't come through? That is a big question out there. So the banks are very careful how they dip their hands in their pockets, Harriet, and give out another set of cash. And I just have a few naira here. I mean, just pull them out and say, well, okay, let's give it that. You don't want to see.
It's not particularly a very, very pleasant thought right now. And, based on where the country is at the moment, we really can't do without this kind of stress. But let's talk a little bit more about the Port Harcourt refinery that's supposed to have come on stream at the end of June. Well, they now pushed it to sometime within this month. So what are your expectations? When they come on stream, do we expect to see, less of the queues at the station?
That's a significant work in progress. Over the weekend, what we got through the social media, what I got was that, 90% of work has been done with the Port Harcourt refinery. Don't forget the level of decay in the 4 refineries, 2 in Port Harcourt, 1 in Warri, and 1 in Kaduna, had been significant. Over the years, they've been neglected over several decades, in the main, to be speaking. The turnaround wasn't coming through, financing wasn't coming through, supply of crudes to the machines hasn't been happening, and the workers were largely folding their hands in the manner of speaking. So to get these engines and this system back on track, to test them, these are old facilities, if I may add that. These are not new, modern refineries that you have in Indonesia, in Malaysia, in Rotterdam, and other refining capitals of the world. So you need to get on with these old machines and get them up and running. So 90% completion of turnaround, that is good. Perhaps they couldn't make the June 30th deadline. They should set another deadline that will increase more availability of local products, reduce our imports to a very sustainable level, and gradually perhaps we can close that window, bringing petrol in and meeting our own local demand. And of course, you have Dangote looking at 2016, 2017 deadline to complete its refinery in Lagos. We don't know what the size of that will be, how soon that will run, but the deadline is between 2016, 2017, and we're halfway down 2015 already.
Well, Bosin, looking at the situation now as it is, do you think there's any reprieve in the very, very short term?
If the short term is as soon as you leave me and get out of the studios here, I'm not too sure. So we still put our jerry cans in the boot of our cars. We're back to Friday, isn't it? Put a jerry can in the boot of our car and drive around and see wherever you can grab some petrol stations open at whatever price that you think you can afford. Yes, because
right now they're selling between 100 and 150 in some cases, 160, and not a lot of people are particularly happy about, especially those who depend on it for daily production of whatever it is that they're doing, or their businesses to run their small generators, for the SMEs, for instance, for those who have to get from point A to point B, and also for the transporters as well, the downfall drivers, as we know them. It's not a very pleasant situation. Well, so we have transport prices skyrocketing.
Well, if you're at the salon over the weekend, Harriet, and you got to retouch your hair, perhaps the generator just went off, and you have what do you call it? A dryer over your head. You got to go to the petrol station to get additional supply. You know how it feels.
Well, I do. Well, thank you so much, Bosin. Do have a profitable day. We'll see you on the other side. Still to come on Business Morning, attaining food sustainability, what has been achieved.